In this video, I'm going to show you how to analyze cryptocurrencies for profits. Hi there, my name is Mr. FoMo, and in this video I'm going to teach you how to trade cryptocurrencies for a profit. Trading can be a very profitable venture, but it's also risky if you don't know what you're doing. That's why in this video I'll break down the basics of technical analysis so that you can start making money today. 1. Cryptocurrencies are on the rise and present a unique investment opportunity. They are digital or virtual tokens that use cryptography to secure their transactions and to control the creation of new units. Cryptocurrencies are decentralized, meaning they are not subject to government or financial institution control. Bitcoin, the first and most well-known cryptocurrency, was created in 2009. Since then, hundreds of others have been created. Cryptocurrencies are often traded on decentralized exchanges and can also be used to purchase goods and services. They have seen a surge in popularity in recent years as their value has risen sharply. Bitcoin, for example, was worth less than $1,000 at the beginning of 2017 but had reached over $60,000 at one point of time. Many experts believe that there's still a lot of room to grow. As such, they present a unique investment opportunity for those looking to get involved in this exciting market. 2. Cryptocurrencies are digital or virtual tokens that use cryptography to secure their transactions and to control the creation of new units. They are often traded on decentralized exchanges and can also be used to purchase goods and services. Proponents of cryptocurrencies argue that they are a more efficient and secure way of conducting transactions than traditional fiat currencies. They also argue that it has the potential to disrupt the current financial system. Critics of cryptocurrencies argue that they are highly volatile and susceptible to price manipulation. They also argue that crypto are often used for illegal activities such as money laundering and drug trafficking. Despite these concerns, the use of digital coins continues to grow. And some experts believe that it will eventually become a mainstream payment method. Only time will tell whether this technology will revolutionize the financial system or fizzle out like so many other technological innovations before it. Please feel free to subscribe and smash that like button if you liked the video so far. Also let me know in the comments what are your thoughts about it. 3. The most important factor when analyzing cryptocurrencies is understanding market sentiment. By this, we mean investors' current feelings about a project, which could be anything from excitement to disappointment. This can be tricky to measure, but it's worth doing because it can have a big impact on price movements. For example, if there's a lot of negative sentiment around a particular coin, then it's likely that the price will fall even if there are no other macroeconomic factors at play. On the other hand, if investors are feeling bullish about a project, then it might rise in value even in the face of bad news. Of course, sentiment is just one factor to consider when analyzing cryptocurrency projects, but it's an important one. Get it right and you'll be well on your way to making profitable trades. 4. You also need to keep an eye on technical indicators and price action. When it comes to crypto trading, it's not enough to just pay attention to the news. You also need to keep an eye on technical indicators and price action. This can help you make more informed decisions about when to buy and sell. There are a number of different indicators that you can use, but some of the most popular include moving averages, support and resistance levels, and Bollinger Bands. By tracking these indicators, you'll be better equipped to make decisions about when to enter and exit trades. And while no indicator is perfect, using them can give you an edge in the market. So if you're serious about crypto trading, make sure to stay up to date on the latest indicators. 5. Finally, always use a stop-loss order to protect your investments. If you're serious about crypto trading, then you need to use a stop-loss order to protect your investments. A stop-loss order is an order that automatically sells your crypto if it falls below a certain price. This ensures that you don't lose all of your money if the market takes a sudden dip. You can set up a stop-loss order manually, or you can use a crypto trading bot that will do it for you. Either way, using a stop-loss order is essential for anyone who wants to protect their investments and minimize their losses. If you're looking for an investment opportunity that has a lot of potential, then cryptocurrencies are worth considering. However, it's important to remember that there is a certain amount of risk involved and you need to do your research before getting started. The most important factor when analyzing cryptocurrencies is understanding market sentiment. You also need to keep an eye on technical indicators and price action. Finally, always use a stop-loss order to protect your investments. If you want to learn more about trading cryptocurrencies, be sure to subscribe to my YouTube channel. Thanks for watching.